And soybeans sliding 2 digits today, and who Mike Zuzolo is going to comment about the market fluctuations and the Federal Reserve actions right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. Stay tuned and don't forget to subscribe. So, Mike, how are you today? So, what's that slide in the commodity markets?
Well, I mean, coming back from the holiday weekend, these 3-day weekends tend to give us either a big turnaround in the price action or a big continuation of the pre-holiday price action. And I think what we had were a couple things going on, Luis. The biggest thing, obviously, is the remnants of Hurricane Ida. We just cannot seem to get a firmness or a grip or any traction in the Gulf of Mexico corn and soybean price. And that continues to back flush into the basis and the river system as you go up the rivers. And it's almost like what Hurricane Ida did to the Mississippi River itself by changing the current and pushing it north. These basis levels are being pushed north now. And we continue to see Illinois river prices and Iowa river prices just continue to collapse. And you're seeing 50, 60 cent per day basis drops in some of these river bids. And while it wasn't that dramatic as we came back from the holiday weekend, we still had not gotten any kind of firmness in the basis. So I think that's point number one is the trade really doesn't know any more than it did before the holiday about when we're going to resume exports. What I know is that about 80% of the energy is still shut in the Gulf of Mexico, New Orleans area. I continue to think this is probably going to be the worst hurricane in American history as far as damage to the infrastructure from standpoint of grain and energy infrastructure. I had found out through some of the news contacts down in New Orleans that a big refinery that Shell Oil runs is looking at an additional 2 weeks before it starts up. And so we're looking 3 weeks out now for energy and probably grain terminals to be able to be up to capacity and take on shipments and ship those grains out. And so I think this is just a continuation of the trade thinking, well, we're not only having difficulty with Hurricane Ida, but we're right up against our next crop harvest here in the United States. So what are we going to do with all this corn and beans that we're getting ready to harvest? And that's why I think in part these bids in the upper river system are getting hit so badly in terms of cash business and cash basis. So between that and a retaliation or a reaction by the outside markets after the Federal Reserve's commentary and policy decision making at Jackson Hole and minutes that we saw, I think the trade is really starting to figure they better come back to earth as far as the ability of the global economy to continue to go higher, given what's been going on with this Delta variant and with some of this economic data. The most recent, the jobs report from Friday.
Another question I have is that if the market is not looking into the longer term, because I think that next year probably will not repeat so many weather issues like 2021.
Yeah, and also 2020, we also have the problems in South America and in Australia and China for that matter in 2020 that helped lead us to the 2021 demand base that we were able to take on because of these supply issues. So I agree with you on that. I think the biggest thing to think about is you brought up a key term, and I think that's long term. I think the real serious marketing person is going to shine here, I think, because they're going to be able to differentiate between short term and long term. And what I wrote in this past weekend's weekly update newsletter about the fall harvest for corn and beans is the idea that between the USDA report on Friday, the harvest picking up very rapidly because of the hot, dry weather we've had most of the month of August, and it looks like it's returning now into the early part and middle part of September. And because of what has happened with Hurricane Ida, I think that we're going to see a big push to the downside, kind of leveling off after the WASDE report this Friday, and maybe sideways to lower after the report. But then I'd be looking for a low to come in around the end of the month, right around the grain stocks report. That's kind of what I'm laying for right now at this point, Luis. And one of the big reasons that is because if we don't see the dollar charge higher and break above that 92.55 resistance, and then break above that 92.90 resistance, which is really critical resistance to stay below from a longer term trend. If we can keep the dollar contained, the US prices of grains are hitting really low values, and it's a bargain, in other words, because we still do have the remnants of some of these weather issues in the other parts of the world. And so I think the demand base will come in pretty aggressively once we get the ports and get the Gulf back up and running, if we do take another leg down in this market.
And I want you to emphasize a little further what will be the impact of the Fed tapering. That I think the statements of the Fed president are already old right now, given the fact that the jobs report in the US was not so strong as expected.
Yeah, I look at it in a different way, but similarly, that the jobs report and what the Fed talked about at Jackson Hole kind of go hand in glove, because the Fed made it very clear that their tapering decision was going to be predicated upon inflation, which that has been met as far as their requirement, and also the labor and jobs market, which had not yet been met in their minds. And so when we got done with the Jackson Hole meeting and then saw this terrible jobs report that was literally a third of what the trade was expecting on Friday, that to me signaled that the Fed would not want to taper anytime soon. And that while the trade was expecting this to happen maybe even this month and almost certainly in October, as far as a taper, a pulling back of the asset purchases, I think it really calls into the question whether the Fed will really do that, especially in light of some of the other economic data coming out of Asia. You know, Asia continues, and I think this is the heart of the problem right now when it comes to the commodity demand inflation market, Luis. The Asian governments and their policies, for the most part, are a zero tolerance policy on COVID. They don't want any cases of COVID at all. That's just not realistic. You're not going to be able to shut down your economies in your government in your whole countries just for the sake of saying we got our COVID cases down. I think we're past that point at this stage, and I think that really rattles the investor market, because if you try and shut down ports and you try and shut down key infrastructure areas of the supply chain, you're going to have economic problems. And I think that's what the market is really contending with right now. And they see that countries like China, like even Australia, like the Philippines, are really working hard to shut their economies down so that they can get to a zero COVID status. And it's really hurting us economically speaking.
Yes, I want to hear your opinion about the WASDE report on Friday. I have some remarks on that. I think that the USDA will not update the Brazilian number in the speed that the market could expect. This week, Ag Rural has updated its projection for the Brazilian crop and decreased the corn crop to 82 million metric tons. But still, I guess the USDA will wait for CONAB.
Yeah, and if memory serves me right, USDA is at 87, isn't it? Still. Well, so you don't think they'll come down at all, even a couple million tons, or are you just saying you don't think they'll come all the way down to 82?
They will not come down to 82, I think.
And that's going to be important because what I talked about with clients in the same newsletter I referred to earlier was the idea that maybe we will lose some demand and maybe we will see USDA take demand down here domestically. Maybe we'll see them take acres up, especially in soybeans, since they said they were going to reevaluate the acreage base last week. They put out a special notice about that. And maybe we'll see them tweak the yield, and maybe that yield will go higher. Some of the private firms are coming out this week with some astronomical numbers as far as yield. I think one out of Chicago just this afternoon, before we went on the air, went up to 183 bushels to the acre, 183 plus, and that was well above the newswire estimates that I've seen. But I think that if you don't see the USDA bring down Brazil, then you're going to see the whole world ending stocks of corn go up. Otherwise, I think you could see the US stocks go up, but then USDA push down Brazil, and all of a sudden the world ending stocks and stocks to use ratios globally don't change that much. And I think that'd be very healthy for the market, given the fact that we're now in lead month futures below $5 in the market, and we're less than 15 cents away in lead month corn of closing where we started out at the beginning of this whole calendar year.
And are you updating your own numbers on the U.S. crop?
No, I'm sticking with one. I mean, yes and no. I'm sticking with 174.9 or excuse me, 175.9 in the expectations for the corn. I'm not going to change that this month. It's maybe tweaked at 0.3 of a bushel or something like that. And I think I'm going to stay with a 49.8 or 49.9 yield. That's up maybe 0.6 of a bushel in the soybeans. But I'm really not going to take them up much because of the August weather and some of the key rains events that happen. I'm going to elect to wait for the first 2/3 of September, because if we turn off hot and dry again, some of the clients I've talked to, and this is where my reasoning comes from, some of the clients I've talked to in areas that you would think would be helped right now by the August rains have told me that it may help if they get more and if it cools down. But if it turns back hot and dry, they'll probably lose corn test weight, and some of the pods won't fill out. Some of the beans in the pods won't really get as big as they need, and they'll have BBs instead of full beans and full pods. And so I think I'm just going to wait for the most part, Luis. I've tweaked them, like I said, just, a tenth or 0.2 or 0.3 of a bushel. It's really the demand base that I'm going to be watching closely as far as what USDA does.
And are you seeing any immediate impact on the livestock sector?
Yeah, I mean, what we're seeing in livestock is we've gotten a couple key pieces of information. We've got an annual Brazilian update from the Ag Attaché, and we've gotten an annual livestock update from China from the Ag Attaché. And both of those, and I actually started my 2022 outlook in this newsletter I've been talking about. And I think that we're going to continue to see overall supplies drop globally as herds rebuild. And so exportable supplies maybe not be as available, disease pressure still being an issue. And it was very timely. I had written that before the mad cow story of Brazil came out. And I think the U.S. is poised, as long as the dollar doesn't explode higher, I think the U.S. is poised to continue to gain or at least keep its market share for beef and pork exports. So I feel like we have better prices in 2022 for livestock coming. But I would say that you still want to hedge, because you don't know what type of second half of 2022 we're going to have in terms of the global economy. So I think the first half of 2022 is probably going to be the better half, if I had to guess at this point. And I would say that also from a standpoint of the feed prices and what we're looking at in terms of a break in feed prices, and that maybe not being around the second half of the calendar year. So I'm a hedger at higher levels, but I've got those price forecasts in that newsletter.
All right. Any other comments?
The big thing right now, Luis, going into harvest is whether we see early yields in corn perform really well, but then as we get to the later part in the medium time period of plantings, and when we start to combine those corn bushels, whether we see some pullback on yield and pullback on test weights, because that's something I think several states are going to have to deal with.
Thank you, Mike.
Thanks, Luis. Have a great week.